Oh boy, you know it's bad when I'm wearing this hat, guys. The markets got destroyed today, as you probably know. And if you didn't know that, where the heck have you been? We had the S&P 500 close down a whopping 3.3% today. The Russell went down 4.7%. We had the Nasdaq down 4%. As we had the Dow Jones hold up the best, but still, it went down 2.4% on the day as the VIX went up over 11%, and we had the metals rip, gold up 2%, and we had silver up 2.5%. So in this video, we got a lot to break down. The markets, charts, stocks, earnings. We're going to break down Adobe's earnings and Kroger's earnings in this video. So sit back, relax, take a sip of your coffee, get your 10 free stocks from Moomoo, link down below with a $100 deposit. And you could also get 6 free stocks from Webull with any amount deposited. Again, all of that is linked down below, and that helps out the channel immensely. And I appreciate you guys, as always, for tuning in, hitting the like button, subscribing, supporting. You guys are awesome, and I really appreciate you guys a ton. So let's dive into the video, as again we had a big red day in the markets. And not to toot my own horn, but what did we say yesterday? It was my video. Let me pull up my title from yesterday just to really read it to you guys here. What did I say yesterday? My title was, "This is not the bottom." And obviously nobody knows exactly what's going to happen, and I've been wrong in the past, so I'm not going to act like I'm always right and I'm some kind of saint or something like that. But yesterday I said this is not the bottom. Don't get too wrapped up in the little rally we saw after the Fed meeting, and I ended up being right. Look at this on the 5-day 5-minute chart on SPY. Look at this spread, guys. We hit almost 380. Where were we yesterday? 385 we hit on SPY right before the close of the day, and we hit 365 today. We are down from 385 to 365. We are down 5% in just 24 hours, literally from right before close yesterday to right before close today. That's a big drop. And you guys can see on the intraday chart, we sold off pretty much all day. I mean, we had a little rallies here and there, but the downtrend was intact all day. You guys can see that. Same thing on Triple Q. We'll pull that up here in a second. Then we'll talk about the Dow Jones, which I do want to see if that got into a bear market at close. We shall see, as the Dow is now trading, I believe I was reading, at the lowest point since January of 2021. But before the Dow, let's look here at Triple Q, which went down 4% on the day. It hit $269 at about 3 p.m. on the East Coast. So let's see what it was at yesterday. Let's see here. Triple Q was at 287 yesterday, and it hit 269 about 30 minutes before close, to about an hour before close today. That is insane. We're talking about a 6% drop from the euphoric pop after the Fed meeting to the low of today. That's why I always say, guys, be careful and expect the unexpected. When we get massive rallies within this bear market we're in, and I've mentioned this, I made a video about 2 weeks ago talking about bear market rallies. We have seen many bear market rallies, and they all, not all of them obviously, but because at one point it is the bottom, but we don't know in real time when the bottom is. But bear markets, we have a lot of rallies within them. You got to realize that, and I've talked about that a lot here on the YouTube channel. So you guys see here fresh lows on the 4-hour chart on Triple Q and on SPY, and it doesn't look like we want to reverse anytime soon. It's not like we're getting a huge pop to the upside. We literally just hit a fresh low today, and we got earnings to talk about here in a second. But first, let's look at the Dow Jones Industrial Average, because in my previous video I mentioned how this was awfully close to a bear market. Let's see if it ended up hitting a bear market today. So we hit a low of 29,740. So let's see how close we can get to that. And the all-time high here from back in November, or actually January, was 36,950. So this got awfully close, but no cigar, guys. It got 19.5% down, from all-time high. So that is almost in a bear market, but again, not quite yet. And listen, if we get a bad day tomorrow, maybe next week, we do have a short week next week, by the way, but let's say we get a bad a couple of days next week, this will be in a bear market just like that. We're super close as of right now when I'm filming my, this video that you're watching. So what do you guys think? I mean, the S&P is now down 24%. Dow's getting down 20%. We have the NASDAQ. Let's pull that up here. This got to be 35% now at least. Let me see here. Triple Q's down, 35% from all-time highs. The Russell is down. Let's see here, from 16, it just hit 1640, and it was at 2450 a couple months ago. This is down 34%. So how much lower are we going to go? Is the NASDAQ 100 going to go down 40%? Will it go down 50? I mean, I don't know if it's going to go down 50, but 40, it sure looks like 40% down is in the cards based on, the way the markets are looking like right now. The violent sell-offs, the volatility, no slowdown in inflation in sight. I mean, why couldn't you see it go down to 40%? It's already down 34%. It could go down 6 more percentage points just like that. Same with the Russell. So we're getting deep in this bear market at this point, guys, especially in tech and small caps. And, like we've been seeing, the big dogs are dropping as well. We'll talk about big tech here in a couple of minutes, so stick on throughout the video because they are finally starting to come down, which is why the markets now are really getting into a bear market, the S&P and the Dow in particular. So let's talk about some earnings. If you guys are finding value, by the way, hit that like button and subscribe. It really helps me out in the YouTube algorithm, and let me know your thoughts down below in the comments. Let's break down these earnings. Excuse me, guys, if I can even talk. And actually, cheers, by the way. Let me get some coffee while we're at it. So let's take a look here. We have Adobe, and I mentioned how Adobe is a buy for me between $250 and $300. Let's see how the stock is looking like right now, as it is $440 when I'm filming this video. So it closed at $365. It went down 3% on the day, as expected, as we got completely destroyed in the markets. And here after the bell, looks like Adobe, holy crap, look at that. Adobe's down 4%. So it's down 7% on the day if you're including that aftermarket hour drop, and it's down 4% after the bell. It's trading at right around $350. So this is good. If you own Adobe, I'm sorry, but I want it to come down lower, and I'm actually rooting for it to go down. So I'm sorry, but I'm looking to build a position in Adobe here, throughout the course of this bear market. And like I say all the time, and I've said this hundreds of times, I feel like, during the bull market when everything was euphoric, we were all making money, hand over fist, the stimulus, the this, that, the third. I was telling you guys, have a watch list, have a shopping list, have price targets for your stocks, right? Do fundamental analysis, because when the bear market comes, a lot of stocks are going to collapse, and we are seeing that now. There's hundreds of stocks that have collapsed, and everybody is, well, I don't want to say everybody, but people are probably at this point running like a chicken with its head cut off, and they don't know what to do. But I told you guys, and you can still do this now. Pick 5, 10, 15, 20 stocks that you really like, focus on those, and, look at price ranges based on fundamental analysis and numbers and all that good stuff that you would want to buy these stocks at, because now is the time to buy stocks. I'm not telling you what to buy, but now that we're in a bear market, valuations are coming down, you have to have a shopping list. And Adobe is on my list. And have I bought it yet? No, because I'm being patient. It has not hit my price level yet. And if it does, when it does, I mean, I don't want to say for sure it will, but if it does, I'll be buying more. Or, well, not buying more. I will be buying into Adobe. So they did very well. I mean, not very well, but, well, I guess they did do well, but guidance not looking good. We'll talk about that now. So EPS came in at $3.35 versus $3.31 estimated for Adobe. That beat. We also saw them beat on revenue, $4.39 billion versus $4.34 billion estimated. So double beat, which is great, but, and this is why the stock is crashing right now after the bell. Well, not crashing, but it is down a good chunk. They see Q3 revenue of $4.43 billion versus $4.51 billion. So that's a little bit soft there on Q3 revenue guidance. And they see full year EPS of $9.95 with full year revenue of $17.65 $5 billion. So they did beat, double beat for the prior quarter, but the guidance is not looking so good. So again, bring it on. I don't care. I mean, I don't give a crap if the guidance is suffering right now, because I know long term, I'm very confident. I don't know for sure. Nothing's guaranteed, guys, but I'm confident long term that Adobe is going to be here. It's going to be a thriving business 5-10 years down the line, and I want to be a part of it. And now that it's down 52%, getting closer to that 250, 300, I'm looking to buy it. So let's see Kroger, KR. They ended up doing pretty well, as I kind of expected, and the stock didn't go crazy like it did the last time they reported, but it did well either way in terms of the actual numbers of the company, guidance, and so forth. So Kroger went down 2% on the day. And what we're still noticing here is a wedge, higher lows, lower highs, under the moving averages, all that good stuff. And they ended up doing EPS of $1.45 versus $1.30 estimated, with revenue of $44.6 billion versus $44.24 billion estimated. So they actually double beat on the quarter, and their same-store sales were up 4.1% versus the 4% estimated, which is great. And they raised full-year EPS outlook, and they also raised full-year same-store sales growth, and they see full-year adjusted EPS around $3.85 to $3.95. So they're guiding up. Full-year EPS is looking strong. Same-store sales, they're guiding up. This is pretty solid on top of that double beat. So I'm not going to dive into Kroger quite yet, like I've mentioned in previous videos, and you guys can see here on my alerts. Based on my alerts, I have one at 53 and 55. I want to see this come up a little bit more. Start breaking out, above the wedge here, out of the wedge, above these moving averages. That's where I would heavily consider picking up Kroger, more as a trade, not so much as a long-term investment per se, but more as kind of a short to mid-term swing, maybe a couple of days to it, or well, that's pretty short. Maybe a couple of weeks to maybe a month or two swing. Maybe not a month or two, considering we're in a very volatile environment, but for a couple of days, maybe a week or two, I'm going to be looking at it as a trade. That's kind of my time horizon that I'd want to be in the stock. And of course, if it doesn't play out, which is possible, you could always cut losses. I could always cut losses and or just get out of the stock and move on, right? So before we dive into the other stocks, energy, some healthcare, and big tech, make sure to get your free money from Webull and from Moomoo, guys. Again, you get 10 free stocks from Moomoo, each up to $2,500 with a $100 deposit that's linked down below. And you could also get 6 free stocks from Webull with any amount deposited, also linked down below. And with that being said, cheers. I definitely need this as my voice is jacked up in this video, guys. And let's talk about some other stocks. Hold up. So, J&J, look at this. We have a lot of these healthcare companies coming down, right? J&J, UNH, AbbVie, Merck, a lot of these are selling off, but the charts look pretty decent. AbbVie at this point is now down about 10-11% from the recent 186 high, 187 high. And if I pull up the yearly chart, you guys will see that we're clearly in this uptrending channel. So I'm not saying that this right now, right here, is the bottom on J&J, or it's going to rally tomorrow or next week. I'm not necessarily saying that, but I'm saying keep an eye on it over the next couple of weeks because, historically speaking, based on the past couple of months, and mind you, people are still going to flood into value, in my opinion, J&J being one of those value plays. I feel like buyers could step in. Honestly, 165, 170, I mean, this could be a spot where we end up rallying maybe towards that 180 plus level yet again. So keep your eyes on J&J. And of course, you guys know I'm watching energy. I said that in my earlier video, so I don't want to harp on it too much, but crude oil did go up on the day. It's currently up 1.5% right now. It's right around 115 a barrel, clearly holding the uptrend above the 180 SMA, now trying to break out of the 50 SMA. So I'm keeping an eye on that uptrend playing out. ExxonMobil's an energy stock I'm watching. It went down 4% today, which is not bad. Let's flush out some of those sellers, profit taking, whatever. And let's see if buyers come in. 90, 85, 90, 95, wherever it ends up being. Let's see if it happens. MPC Another one, this went down 7% today, got completely clobbered. Now MPC's down 20%. I think now could be a decent time to look at potential, or watch for rather, potential buyers coming in. 90, 95 a share. Let's see that here on MPC. We also have CVX, Chevron. How could I forget? CVX went down 5% today, got clobbered. We have big support coming up around 150, 155, mostly around 155. So let's see what it does there. And I also want to look at big tech quickly before I wrap the video up, guys. Apple went down 4% today, and look at that. It fell under 130 bucks a share, hit a fresh low at $129.04. And this is one that I also own, Apple AAPL, which you guys probably know that ticker already, and I'm going to be buying more of it, not anytime soon per se, but if it comes down towards 100, 110, that's where I would consider it. If it comes under 100 somehow, which I'm not calling for that, but you never know. If it does, 90, $80, if that ever happens, I'll be buying Apple there for sure. We have Microsoft today, which went down 2.7%. It's trading near that 241 low. We had Google, which we are hopefully going to see under 2,000 here soon. Google's at 2130 right now. It went down 3.4% on the day. Meta, which I want to buy more of, went down 5% on the day. And this, anywhere between 150 to 160, I honestly think is a steal long term. Personally, I'm not trying to tell you guys what to buy, when to buy. I'm not doing that here. But for me personally, it is a steal right here, and I'm going to be buying a lot of Meta over the next couple of weeks by the looks of how the markets are trading right now. What else? We have Amazon. Did this thing get under 100 yet? It's still fighting above 100. I'm telling you, though, if this gets under 100, which I think is going to happen personally, if it starts going 90, 95, that might be a spot where it might be a decent idea, in my opinion, to pick up some shares for maybe a short-term rally play, a relief rally play, which at that point, if Amazon gets down to 90 bucks, guys, we're going to be at a fresh low, way oversold. We're going to need to snap back probably towards 100, maybe a little bit higher than that. So with that being said, guys, that's it for the video. I hope you all enjoyed it. We've been going hard with the video, so I would really appreciate it if you hit that like button and subscribe if you actually like the content here. And join my Patreon if you want to support me even more. And of course, you get exclusive updates there. You get my buys, sells, call outs, morning videos, more access to me throughout the day. All of that's on Patreon, link down below. And don't forget to get your free stocks from Moomoo and Webull and 40 bucks off Seeking Alpha Premium. All of that is linked down below. I appreciate you guys as always. I'll catch you in the next video. There goes Siri again. Shut up, Siri. I'll see you in the next video. Peace out, guys.